Welcome to the Planning for Life podcast with certified financial planner professional Russell Jacobs and financial life advisor Carl Coolidge. Carl and Russell will share creative strategies and ideas for overcoming challenges in your personal and financial life. Inevitably, life happens, and we will empower you to reach your destination. Thanks for joining us. Now, on to the show.
Hello and welcome to another Retire for Life podcast. Today we're going to talk to Carl Coolidge about some of the financial considerations for business owners. You know, running your business is one thing, and a lot of times as a business owner, you really just get focused on the day-to-day operations, the sales, the growth, but you don't always pay attention to all of the really wise financial moves you can make in order to maximize your business. In fact, there are a lot of business owners who make a lot of business mistakes when it comes to money. But when you work with a financial services professional, when you work with a planning firm, things can really change. Your eyes can be opened as a business owner. And that's what I'm going to talk to Carl about today. So, Carl, welcome to the show.
Thanks, Matt. Great to be here, as always.
Now, we're going to start off with something that, very few people really want to talk about, which is the tax liabilities. Now, with the new tax law that happened a couple of years ago, lots of stuff changed with business owners. And I know that you're not a CPA and a tax professional, but from a big picture perspective, what are some of the things that business owners should pay attention to?
Well, I think, primarily what you have to look at is how your company or structure is set up, whether you're an LLC, an S corporation, a C corporation. And again, I'm not going to get into those details as that's very specific and CPA oriented, but I think it's important to make sure you have your corporate company structure really nailed down. Because with the tax law changes, some of the ways you can compensate yourself can be more advantageous to business owners, or again, certain ways that you have vehicles or phones or own properties and things can also be advantageous. So I know I can't really get into that specifically, but it's something definitely to look at because there is some opportunity there to pick up some benefits from the new tax law, and also to make sure you're not getting penalized, because I have heard that with several of our higher net worth clients and higher income producing clients that, the tax law really didn't benefit them, because while technically it lowered some of the tax rates, it cut off some of the deductions and other things you can get. So net, it wasn't as rosy as it seemed.
Mm-hmm. Yeah, I'm right there with you on that, brother. That's a meeting with my financial professional really opened my eyes to some of the things that I had always been able to deduct or defer that I wasn't able, and we had to make some adjustments.
Yeah, it's one more. It's one of those PR things, that seems good on the surface, in my opinion, but not so good when you get down to the details, as sounds like you saw firsthand.
Yeah. The next thing that we need to talk about is insurance. And insurance is wildly complex when it comes to business owners. I mean, you can have key man, buy, sell, life insurance. You can have disability insurance offerings to your team members. When you're looking at the business owner, though, specifically, what are some of the major insurance considerations they should have?
Well, a lot of what you just mentioned, you want to make certain that a lot of small business owners, which we work with, they are the business. So if something happens to them, the business really fails to be there anymore, or certainly is not in the same capacity or production mode that it was previously. So, as you mentioned, key man is always important to have on the business owner, and as much for the company to maintain what they're doing, but also for you want to have it set up and structured where eventually it gets to the spouse or the children, because when you look at a business, the value of the business driven by that key man or key person is where a lot of the value comes from. But when they go away, you want to make sure that a spouse could get compensated for that. And so what I mean is, for example, you have a manufacturing business, you're doing wonderfully well, you're making, very good income, and then you pass away and you say, okay, well, we'll just sell the business. Well, if the key person or the key cog of the business is gone, that value is probably not going to be near as attractive as it was. So that's one of the pieces of the insurance to me is you want to make sure that you're getting that to your spouse or to your children or to whomever you want it to be to realize that value. So key man is obviously a big deal. And again, some business owners do have a true key man besides themselves that, insurance can be put on that can be very valuable because if for some reason they're not able to do it, let's say it's one of your best salesmen or one of your best mechanics or one of your best service people, you want to make sure that if for some reason something happened, that doesn't totally decapitate your business, where you have the ability to have some capital in order to plug someone in new to that situation, or at least give you time to review that. So those are two of the big business insurances. Also, when you look at buy-sell agreements, if you have multiple partners, it's really the same concept. You want to make sure that you don't leave your partners in a lurch when you're covering debt, but also you want to have those spouses realize the value of what you built. And for most of our business owners, you also want to have that insurance and documents done in the correct way because you don't want to go into business with your business partner's spouse. And that becomes a whole different conversation. But those are the things that with life insurance, and you mentioned disability insurance, there's also what they call disability buyout insurance. So if a partner was disabled, it allows you or gives you a way to buy them out through a disability contract. So there's just a lot of different tools for business owners, and a lot of them can be fairly inexpensive just depending on how they're structured. But it really gives you peace of mind that if something happens or you're disabled, that you've got a good foundation set up.
Most business owners seem to pour almost all of their money back into the business because they see that as their greatest asset. When you talk to business owners about retirement planning, how do you even begin that conversation to get them to change their mindset from just investing in their business to investing in their future?
That is a great point, Matt. We have that conversation quite a bit. Sometimes it can be uncomfortable, but I feel like our role as their advisor, we want them to understand that with any business, and it really doesn't matter the type of business, but it's not always going to be a positive thing. So a lot of people go back to 2007, 8, 9, wherever you want to say it, really happened with the real estate bubble. And where we're located, there's a lot of real estate investors who do quite well. And so prior to that, if you talked about diversifying anything, they weren't open to that because obviously they were making tremendous returns on the real estate. Well, then obviously 2007, 8 happened, and all of a sudden their perspective changed because, their net worth, their value, all of that went very south in a hurry. So what we talk about is we want to build assets outside of that business, as you said, but it is a challenge because business owners are very, very comfortable with what they built. They feel like they understand it very well. They can control some of their costs. They, are able to price their services. So they just feel very comfortable in that space. So our conversation is absolutely, that's great. Continue to do what you do well. But when things aren't good, i.e., like I mentioned about the real estate in 2007 and 8, we want you to have other resources so you're not totally dependent upon your business. And so what we try to do is find some balance of, okay, reinvest in your business, but give us a piece of that or a percentage of that, or let's find some comfortable way to start putting some funds elsewhere. So when we do have issues, concerns, or industry changes with your business, you've got other assets and you're not as concerned when that happens.
When I was researching for this podcast topic, something that came up that I don't even really know, I think, Carl, the right question to ask you, but how do you, as a financial advisor and working with a financial planning firm, help businesses with cash flow?
One of the things we really focus on is doing our expense worksheet. I mean, we think everything sort of begins and ends with that, because the focus a lot of times is, how much money do you need to save? How much are you going to need at the end? A lot of people say, what's my number? What do I need to have? Well, that's all fine, but we really focus on what is your monthly expenses, what is your cash flow, because that's going to dictate what you ultimately need long term. So we do have those conversations with business owners. We have certain clients that tend to get quarterly bonuses, so we build things around that because that's not in their normal monthly cash flow, and we're able to do some of the things they need to do from that perspective. But cash flow is one of the hardest things to manage, and so we just have a lot of discussions about even segmenting accounts or just trying to find ways to keep things in different silos for them that, of course, all work together, but helping them understand that, this money is meant for this cash flow covers that. And so it's just a lot of talking through it and just helping them really define that budget or those expenses, which, by the way, nobody really enjoys whatsoever, but it's just a necessary thing so you can get down to defining not only business expense, but also your personal expense.
Yeah. Yeah. Hearing you say that, just I remember what it felt like when I didn't do that. When I sat down and went through my cash flow and really took a look at those things, it was really eye-opening. And we were able to make some really smart decisions to make sure that we weren't, there are things that you're charged for sometimes you just forget about, right? Because, you've got so many transactions going in and out. And that was a really eye-opening experience for me, which leads me to the next question. Can businesses donate to charity, like as a business function? And if so, are there any weird things that you have to do from a legal perspective, or I'm not asking you for legal advice, but do you know what I mean?
The answer is yes. And my partner Russell is obviously deals with the charitable and estate side more than I do, so he's very, very versed with that and works closely with a lot of tax attorneys and estate attorneys that understand that in more detail. But in a general sense, yes, businesses can donate to charity. What I've seen is a lot of them, certainly some will donate money, but usually they're donating services or something that can be advantageous to their business, not only from a PR standpoint, but also from a charitable giving and making an impact in the community. So you can do that, but there are rules around it, which, your CPA and your attorney are going to be more qualified to answer. But there is certainly some good benefits to doing that. You just got to do it in the proper manner so it's beneficial to your company.
You just sparked something, and I don't quite know what you just said really sparked this with me. But I think it was that the company itself can donate not just labor or resources or their services, but they can donate money. Can companies buy life insurance? I mean, can the company itself purchase policies either on the business, for the business? Now, we talked a little bit about the key man and buy sell, but do you mind if we dive into that just a little bit more deeply?
Yeah, absolutely. Most of the insurance is typically paid, or paid by the business. I don't know if you'd say purchased by the business,
Okay.
But paid by the business would be more accurate, because that's how, they view that as a business expense. And then there's always, in the insurance world, there has to be an insured, whether that be the key man, key person, whomever you're doing that on. And if you have a buy sell, obviously there's going to be multiple insureds involved. But that's where we do have a lot of companies pay for it, because typically what business owners do is they really segment their, it's kind of a double-edged sword. They segment their personal expenses, but they also will overlap a lot of business expenses, but they just feel more comfortable or don't feel like it affects their personal cash flow or lifestyle if they can pay for it out of the business. So sometimes it's an easier conversation for them to say, yeah, if I can pay that out of the business, that's no big deal. But if I had to pay it personally, it becomes a bigger deal, even though at the end of the day, it's probably all the same money. That's not how their mindset is. And I think like that as a business owner, and you probably do also as a business owner, but it's just, so to answer your question, absolutely. I would say it's paid out of the business quite a bit when it's a business owner, and then how that affects from a taxation standpoint and all of those things, they work with their CPA to determine. But it's usually much easier for them to do it from a business standpoint.
Gotcha. How when your partner works with the CPAs and the attorneys, is the business itself considered part of the estate, or is it something entirely separate? Are you able to speak on that?
Yes, in generalities, I would say absolutely the company is part of the overall estate plan because, you know, as you mentioned earlier, so much of these companies with small business owners, it's, 60, 80, 90, in some cases, 100% of their worth is what is in the business and what they've built over the years. And so, a lot of conversations with the estate are had around, do you have children in the business? Does it make sense to, put some of that in the name of the children because that's more advantageous from an estate standpoint, or does it make sense to gift shares and do other creative things? As I said, that's more my partner Russell's area. That's where he does very well in understanding those nuances, and but that it is absolutely a big part of the plan for someone when they're a business owner because it's such a big part of their net worth.
Part of their net worth is their ability to earn. And we very quickly glanced over the idea of disability insurance. But as a business owner, can the disability insurance be paid for by the business itself on the owner, or does that need to be generally taken care of individually?
No, you can definitely pay for it from the business, and that's what we see a lot of times. And you can actually get some discounts if you insure multiple people. So there's options with that, but it's very important to have that disability in place just because of what we spoke about earlier. Whereas if they're not there and able to earn income, then the business doesn't function. And more importantly, if depending on the type of disability, if they're not able to see their clients or interact with their customers, then that presents a problem. And a lot of these business owners, it's a very familial type structure where they have a lot of people and a lot of mouths, if you will, depending on that business. And so they take that very, very personal and want to make sure they're doing everything they can, uh, not only to do well for themselves and their family, but take care of all of their employees and their families. So that's where the disability can come in. But yes, we see it paid typically by the business owner. You can get some discounts if you insure multiple individuals, and you know, and then when you get into how the benefit is paid out, there's some different rules on how you pay the premiums to make it more advantageous, which again they work with their CPAs on to determine that. But it's definitely got some advantages to having that in place.
Gotcha. To wrap up today's podcast, Carl, if you wouldn't mind, let's just talk about how important having a financial plan for your business is and some of the next steps that business owners can take in order to really see what their future looks like.
Well, absolutely, you should have a plan for your business. A lot of even banks and institutions, or if you're a small business, you may go to the SBA to get funding. They require a business plan. And so I think your business plan is one piece of it, but then you've also got to think of how that impacts you personally and sort of meshing the two together. So, having that in place is something that you want to get done really in coordination with your business plan, in my opinion. And so looking at your cash flow, I think, is a major item that you should do up front, because that really determines what your needs are going to be, what your long-term goals are. You can build in things if you want to have certain things happen over time. it's almost a pro forma of where you're going to be. And again, a lot of banks and institutions will require some of this, but it's melding that with your personal expenses and just how they all fit together. So I think that's where business owners struggle some, because they're focused on their day to day and really, what they do from a business standpoint. So we talk about focusing, on your business instead of always working in your business. And a lot of times we'll try to say, take one day a quarter and really focus on the business, meaning do all those other things that you need to be doing instead of just the daily grind of working in the business. And so, it doesn't always work, Matt, but we try to reference that and get them to understand that, taking those 4 days a year is probably very valuable to make sure they're doing all the proper things they need to do long term. So I would say get a plan, get a business plan, get a personal plan, get your expenses really nailed down, fine-tuned the best you can, and revisit that on an ongoing basis, and just stick to the plan. That's the biggest thing. Is a lot of planning gets set up and then nobody really follows it. And so it's like anything. If your doctor tells you need to do X, Y, and Z to feel better, and you don't do any of them, you're probably not going to feel better. So it's the same way with the plan. Is if we're helping you and saying, hey, you need to do X, Y, and Z, and you don't do any of them, then that's probably going to be a problem long term.
Well, Carl, thank you very much for walking us through the financial considerations for business owners on this podcast today.
Absolutely. Thank you, Matt.
Now, many of you who are listening to this podcast know other business owners and know that they need to hear this podcast. It's super, super easy to share it. All you have to do is click that share button below. Try to share this good information with people who really need it. You're listening to the podcast. Podcasts are very, very easy to consume, and you're really helping a friend out. It doesn't need that they have to do business with Jacobs, Coolidge and Company or really do any of those things. But this is really important for you as a business owner and with your friends as business owners to truly grasp the financial considerations that most business owners just fail to do. So for everybody at Jacobs, Coolidge and Company, this is Matt Halloran, and we'll see you on the other side of the mic very soon.
The content is developed from sources believed to be providing accurate information. The information in this material is not intended as tax or legal advice. Please consult legal or tax professionals for specific information regarding your individual situation. The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Russell C. Jacobs III, Carl B. Coolidge, James Jacobs, and William Schwartz are registered representatives of and offer securities, investment advisory, and financial planning services through MML Investor Services, LLC, member SIPC, Supervisory Office, Jacksonville, Florida. Jacobs, Coolidge and Company, LLC is not a subsidiary or affiliate of MML Investor Services, LLC, or its affiliated companies.